Ready to go. Hope you all are having a wonderful day. I am Vacation Joey, and this is Scranton Mark, and we're here to present the market to you today. Mark, how are you today, sir?
I'm doing pretty well. How are you?
Wonderful.
I woke up to all this noise this morning, like 6 in the morning. The town was out there cutting the grass alongside of the road.
Hey, at least they mowed it.
Yeah, I got to tell you, Stanford's pretty good like that. Like, obviously it's a wealthy area, but you don't see any, the roads that are messed up get paved, and they repaved all the roads up here, and now they're cutting all the grass. But it's kind of weird to wake up to that.
Yeah.
All right, so let's see what's going on this morning here. Girls are heading away this week, so that should be kind of bizarro.
Yeah, by the way, guys, we were going to be off Thursday and Friday because Mark is going to college to dump off a child.
To drop them off, man. Yeah. All right, hold on 1 second here. Let me just. I think the big thing this week is going to be NVIDIA. So let's look at NVIDIA. They report on Wednesday. The history of companies with valuations like NVIDIA isn't a good one. So the expectations for NVIDIA's earnings are massive. Let's see what that has to say here. Because this stock is so overvalued right now.
Yeah.
When NVIDIA last reported quarterly results, the chip maker forecast record revenue that was far above anything it had put up before. On Wednesday, the latest round of earnings for the company will be a test of NVIDIA's status during the AI investment boom. Well, you know what? I don't know what's going to happen with NVIDIA over the next week or two, but if this stock is not lower in 6 months, I would say something's going to go on here. Like, look at this, right? So I'm going to bring up NVIDIA. NVDA. And I'm going to bring up the price to sales ratio. And I'm going to amaze you. Let's see. Financials. Statistics.
Can you show us a magic trick, Mark?
What's that?
You going to show us a magic trick this morning?
Well, I don't think this is that magical because
okay.
I think people can kind of figure this one out on their own. But all right, so here's NVIDIA, and on the bottom here we have the price to sales ratio. Now, tell me what that looks like to you. Okay.
Well, like it's extremely high.
Yeah. So, and notice how the price of the stock has gone higher too. So that's even more dramatic than one would think. Now, this is the type of stuff that happened back in the internet bubble. You have these companies that just got to these insane levels of valuation. And as we know, bubbles can keep going on for a while. Oh, look at that. It's up $10 in the pre-market. So I guess people are buying it ahead of the earnings here.
Probably just going to run it up, which is good for shorters.
The godfather of AI. KeyBank adjusts NVIDIA's price target. So I don't know if there was any news out, but specifically why they're raising stuff. But anyway, you don't need to be a trader to look at this. This thing has basically had a price to sales ratio of around 3, which makes sense because the price to sales ratio of the S&P 500 is 2.4. So now their price to sales ratio is 44. Well, it's down a little bit. Call it like 42. What are some of the other AI stocks? Let me take a look.
There's C1A3, I believe, which is CA or CI or AI is the stock number.
Let's look at that. Whoops. As traders, we always want to look for things that are at extremes because
C3.ai.
All right, now look at this one. This one's price to sales ratio is 1280, which is still high, but it's not like the NVIDIA one. And so this stock hasn't been around that long. right. So what are some of the other ones?
Palantir is considered one. You got Google as one. Microsoft is considered an AI stock because they've thrown themselves in the ring as well.
All right. So Palantir is actually down too. Let's just look at Microsoft. Now, something like this is probably going to be much more reasonable.
Yeah.
All right. So now this looks like it's been going up, and it has, but I mean, it's at 11. Okay. So let's look at Apple.
And I would say Google as well.
Okay. So the Apple price to sales ratio is about 7.2. And Google price to sales ratio. I mean, now look at that. That looks completely like in line. Now look at how high it was back here. So all right, Google at its highest, at least I assume this only goes back 20 years. So Google at its highest was like 22.07. And all right, let's see what. So I'm gonna take a look at Apple here. Yeah. Apple. Yeah, so Apple is kind of normal. I mean, I would say it's a little bit above its normal, or I guess historical average. But this Nvidia is off the charts, and I mean, maybe they come out and report these huge numbers on Wednesday, but it's really tough to see a stock that's this overvalued staying this high for a long time. Yeah, let's look at the price to earnings ratio. Actually, we're out of here. There's going to be my new toys here using these fundamental ratios. So here's our price to earnings.
Nice.
Sorry, so let me get rid of the price to sales, or at least make it smaller. Okay, so now here we have Nvidia. So we got a PE ratio of 222. So I'm not exactly sure what the S&P price to earnings ratio, but I would guess it's probably around 18 or 19. So this stock is just, it's just absolutely completely overvalued. But all that being said, it doesn't mean it can't go higher. But at some point, this thing is going to reverse because there's just no way any stock could have a price to sales ratio that's that high and just sustain it. I mean, that's like off the charts, I mean, that's like a complete outlier. So where are we this morning? 444. So we're trading right about there. Yeah, I mean, we can see, right, 445. I'm gonna adjust this price line here. I'm gonna adjust this, and that's not cheating. It's just that we true things up as time moves along here. So we got our. Let's see. Let me see what this line is here. 444. I'm gonna make that even 444. It's like so funny. Like the Jets are just such a joke, man. And it's like I swear to God, every time I put on the Jets, it's like something bad happens. So I'm flipping through the channels, and it's like, oh, I don't really like watching preseason football, but it's like I put on the Jets and the Buccaneers, and it's like, all right, there's like a minute and a half left. The Jets have the ball. They're down by 7, and it's like, oh, next play, fumble.
Listen, man, I'm telling you, you need to let me send you a jersey and a hat. You just need to join the Fins Up.
Dude, no one who's above the age of 12 should be allowed to wear a jersey. That's my.
Listen, I know, but listen, I guarantee you, I'm gonna post some pictures on the Stock Jobber site when I go to the Dolphins games. I'm gonna be green. I'm probably even gonna paint my body.
Well, I don't think you got to worry about the Patriots anymore. I think the myth of Bill Belichick has finally been exposed, and I've been saying it for years, and I can because I'm a Pats fan.
Yes, you can. You have validity in your statement.
Yeah, I mean, it was all. I can't tell you how many times over the years I heard, "Oh, Tom Brady sucks. He's a system quarterback." It's like, yeah, okay, system. This guy goes and wins the Super Bowl pretty much anywhere.
Anywhere he goes, he could probably. Right, so go ahead.
Nothing. So I was going to say, so Nvidia is hitting up against this level here, which was resistance. All right, again, for those of you who are late, Nvidia is reporting on Wednesday. I believe it's after the close. And I'm just going through some of these fundamental ratios here just to show you how overvalued this thing is. So, again, things that are overvalued can keep going on for a while. But, I mean, when you got a price to sales ratio that's above 40 and the S&P average is 2.4, that's saying something. All right, let me go see. What is another AI company? AMD, I guess, was kind of considered AI.
I forgot about AMD. Oh, and TSCM. Yeah, TS. TCSM.
TSM.
Yeah. Yeah, Taiwan Semiconductor. Yeah.
So when you look at something like this, I mean, this looks kind of, based on the history going back 20 years, this looks pretty fairly valued.
Right.
But I don't know what it is about NVIDIA that, like, it gets so much, I don't know, attention.
Well, listen, it got caught up in the Bitcoin miner hype because they were making all the cards for the Bitcoin, for the cards, and so it got caught up in that, and it makes chips, so it's caught up in AI. I mean, we're just in a gigantic wave of bubbles. You got AMC and GME, and now you've got that. Then you've got this. I mean, it's just there'll be something else next week.
Yeah, I agree. And like, look at this. I mean, what's the price to sales ratio here? Is not even one.
Got a question from JTI here, Mark.
What are your thoughts on the 50-day moving average? I don't know. I don't really pay attention to moving averages. I mean, people. I guess some people trade around them, and you can use them for setting up trading models. But in terms of like analysis, it's just generally not something. Steelers. I mean, I've never really. It's not that I don't like moving averages or anything like that. It's just I've never really used them a lot because moving averages are like a number that goes backwards, right? They're measuring the past. But let's look up moving average here. Simple moving average. I mean, I guess there's probably some kind of support or resistance around them because other people look at them. But let me see here. This is not. I guess I got to go do it up here. So I'm going to make this a little bit bigger. And we're going to go look at the 50-day moving average. I mean, I just kind of like if you look at this right on GameStop here. I mean, I don't really see anything there. I want to look at the Qs. It's like a backwards looking number, but if you look, I mean, is it really support or resistance? I mean, I guess sometimes it looks like it is. But anyway, going back to your original question, I don't really pay attention to moving averages, other than if I was going to kind of construct some kind of a moving average model, and like a moving average crossover, very popular, and it's because they're easy to calculate, they're easy to understand, and I'm going to let's just call this I don't know, a 10-day and a 50-day. So I'm going to make this 10 days. And I'm going to make it easier. So you guys see Hurricane Hillary?
Yes, I did. And the memes were priceless.
I heard it destroyed 30,000 emails. It was so bad.
That's nice.
Yeah. So if you look at the short-term moving average, which here is the 10-day, this is really just quite simply the average closing price of the last 10 days. This here, the blue line, is the 50-day moving average. This is the average closing price of the last 50 days. So if you think about it, if the shorter term moving average is above the longer term moving average, there's a good chance that the price is moving higher and vice versa. So this is your typical moving average system. And it's like you buy when the red line crosses above the blue and you sell when the red line crosses below the blue. Now, you can see here that one of the good things about these moving average models is that you catch these big trends. So you would have bought here around 280 and you would have sold here around 370. But when you go into these sideways markets, then you tend to get whipsawed a lot. Like you can see that here. So like you would have bought here, you would have sold there. So that would have actually been a small profit. Bought there and sold there, that would have been a loss. So, moving averages are good for some things, and like anything in, trading, there's no perfect answer. I guess it could become kind of a resistance level because a lot of people are watching them. But I just in my history or the way I do things, I really just don't pay attention to moving averages, other than knowing that like, all right, well, maybe people are watching this, but when you look at a moving average, you're actually like looking backwards in time. So for things like this, I think it's good, um, but I don't know. I mean, it's kind of like a Roche, what's it called, the Roche or Rorschach things. Like people see what they want to see.
Yeah, Warshak.
Yeah, Rorschach.
Yeah,
So
there it is.
yeah, so I don't know. I don't really pay attention to moving averages. I mean, I know a lot of people do, but I am not one of them. All right, so let's go see what's going on this morning here because we've had a pretty ugly market, and I guess everyone and their mother is kind of waiting on this Nvidia numbers. But as this could be my trick of the day because I was saying, all right, well, if we get down to around 431, there's a good chance that we get some kind of a bounce, and we got down to 433. So I guess I was off by 2 points. But anyway, notice how we're getting a little bounce. So this happens when we get to support levels. Sometimes we bounce. When markets moving lower like this, it's because there's not enough demand, or AKA buy orders, to absorb all the supply. So the price goes lower. Now, people are watching this thing move lower, and all of a sudden they notice, oh, gee, we're not moving lower anymore. Wow, that must mean something. Oh, maybe it means that there are new buyers coming into the market. And then some of these investors, they get a little worried that they're going to miss out because the sellers are going to go to whoever is willing to pay the highest price. So then you get these buyers outbidding each other. Like one person might be like, all right, well, I'm going to bid 431. And the next person says, you know what, I'm going to bid 432. The next person says, I'm going to bid 433. So who's the seller going to go to? They're going to go to whoever is willing to pay the highest price. So you get this like snowball effect. And that's what's going on here. So this morning we're trading up to about here. But it's not unusual for things that are in downtrends to have some kind of a rebound. I just think that the market's going to go lower because the interest rate environment is like really kind of taken off, and inflation is really kind of taken off, and gas here in Connecticut now is $4 a gallon again, and
People that are buying homes can't afford them.
yeah, and and with mortgage rates going up, that's actually very inflationary because what happens is if people can't afford to buy a new home, what do? They rent. And rent is like one of the biggest components of the CPI. So more people want to rent, that's just going to drive rental prices up. So we're kind of in I don't know, man. I don't think we're in a good place here as a country right now. I don't know if it's ever going to turn, but I think one of the problems is that the deficit is so big, $32 trillion, that it's like people don't pay attention to it because it's so big. It's like unfathomable. You know what I mean? It's like you think about like how far away like a Alpha Centauri is. It's like what is it, 3.2 light years or whatever. Now you can sit here and you can say, oh, it's 3.2 light years away, but I don't think the human mind can really conceive of actually how far that is. And I think it's kind of the same thing. The deficit is so big that people are just kind of like, it's like you just kind of like look away, pretend it hasn't happened, pretend it's not there. But it is, and eventually the chickens are going to come home to roost. And
Listen,
you
there's
get
so
this.
many places that they could cut the federal budget mark and they could lose. I mean, there's so many things that they could trim. I mean, they've got like, 40 agencies that do Homeland Security when it doesn't really need to have even one. We need, and we've got agencies that counteract over top of other agencies. I mean, they're just all a bunch of three-letter words that are wasting dollars. And it's always like that. I mean, we just have so much fraud, waste, and abuse in the government, in the military, and all of it. It's ridiculous.
Well, I'll give you a perfect example, and I should take a picture of this and post it. If I went over to the post office, they got like the main post office, but then they got these little kind of satellite post office, and it's like it says there lunch hour 12 to 1:30, and it's like what's wrong with that, man? Lunch hour is 90 minutes.
Yeah,
Like,
well, that's because it's a government job, and that's part of the beneficial package for getting one of those government jobs that's supposed to be like, when I was a kid, my dad's like, man, don't work for the government. Anytime the wind changes, you're going to get fired, or it's going to happen, something's going to change. You need to be a businessman. And I'm like, well, that's a good idea. But you realize in a business, if you want to get a raise in a business, you have to raise, say, if I want a 3% raise in my business, I've got to make 12% more this year to cover the taxes and the increases in cost to cover that 3% that I'm going to make more in my business. But the government employees, They get them constantly, and it's just gigantic suck. And the biggest thing on a company is the employees. So show you have great ones, but then you have bad ones that just get into the system and know what the benefit package is, and they can live with that, and they just sit there and become part of this big gigantic ball of bureaucracy.
Yeah, you can't get fired. So
You can't, and it's a joke. And they have a union. And how the hell does the government workers need a union? They don't.
I don't really think anyone needs unions anymore.
No,
I
that's
mean,
a
there was a
big
time where they
gigantic
did.
waste. Yeah, well, I mean, wait till your packages start costing $11 to send them the envelope because of UPS.
Well, I know whatever. I just know a lot of union guys that they're just so entitled, and it's like they just think like, oh, if you wear a suit to work, you don't work, and it's I mean, I used to have to watch the Teamsters when I was in college. One of my security guards' jobs was to watch the Teamsters because these guys would just rob you blind, and we used to have to watch them unload the trucks, and like me and one other person could unload a truck in about half the time as a team of like 12 of these guys did. They just purposely work slow. Then it's like you got your coffee breaks, your lunch break. I mean, let me tell you something, dude. I've never had a lunch break in my career because every job I've ever had was on a trading desk, and you get there and it's like you're there from 7 to 4:30, and like you don't leave unless you really have to.
There's
So
always something to do when you work for yourself or you work in a business like that. I mean, just because you don't have a shovel in your hand doesn't mean you don't work. And I've gone home with my head hurting so many times from just doing book work. Uh, just catching my books up that I'm just like, ugh. It just takes a couple days to get over that sometimes. So you just stay on top of it so you don't have to deal with it so hard.
well,
Hey, there's a good question too. This is a good comment from JTI. The student loans are coming due. See, we haven't even seen people start paying their student loan repayment, and we've got $1 trillion in credit card debt already last month. So this is fixing to get really interesting. And
yeah,
you're
I'm
right.
telling you, man. It's at some point the chickens are going to come home to roost here. Now,
Yeah.
I got a cousin who's it's actually my wife's cousin. Real nice guy, but he follows this whole, democratic, whatever mythology. And like we were over there for Thanksgiving a while back, and we were talking about the deficit. He was like, "Oh, well, the government will never go bankrupt because they could just keep printing money." And I said, "Well, you know what? If that's such a good idea, why doesn't the government just send everyone a check for $10 million and then everyone could be rich?" And it's like, "Oh, wait a second. All
Well,
right,
why
so if
aren't we
everyone for
taking
ten
care of
million
the
dollars and
veteran?
you owned a deli, it's like all of a sudden your sandwich you would charge $50,000 for a sandwich."
Well, why
Yeah,
is it so pressing for us to send all this money to Ukraine when we've got homeless people and all these other people in the streets in this country? It just doesn't make any sense. I didn't vote for these people to send my money across the country. I voted for them to keep my streets safe and to
well,
keep these bums from hanging out. I mean, this shit they're doing to themselves in Philadelphia with whatever this stuff is they got where they're hanging and dangling after they shoot it up. Man, that's bad business, Mark.
yeah. All right. So anyway, so XLK here is bouncing, and this is our 160 set. All right. Now, like this is the type of stuff that I look at. Like, all right, obviously we're going to get a little bit of a bounce here coming off of some support. Now, where would we stall out? Well, I'm going to just look at this level here, the 167.25 level. And again, we don't want to be that precise, but be kind of close to it. So we have resistance back here, and notice it turned to support here. So for whatever reason, this particular ETF likes this price level. Resistance becomes support. And you can see over here, it became support for, say, 5 days, let's call it. And now we're bouncing. So we'll probably run into resistance there. And that's where this rally or this little bit of a bounce will probably stall out before we start to go lower. Now, maybe I'm wrong, but this is just what I would be looking at, right? I don't see anything important that looks like it's going to be important between here and up here. And this is only, it's only a point above where we're trading right now. So this little bounce we're having could really kind of just fizzle right out. So let's see what S&P is doing here. So it's up about 40 basis points. And now if I was looking for a resistance here, what I would look at is this former bottom, right? I look back in time here and say like, oh, okay, that's the last bottom there was right around 438. And that's where we're trading in the pre-market. So that's not a coincidence that this is where we stalled out. There's people that bought back here that are now thinking about man, if I can get out, I'm going to. If I can get out at break even, so that's going to cause there to be a bunch of sell orders around this level right here. Maybe we break through it, but considering the fact that we're right under that resistance in tech, we're right under resistance here. Let's see what healthcare looks like. Healthcare is not really moving. Yeah, so nothing really going on there. The financials are up a little bit, but not really anything too consequential. So, if you want to learn more about what's in the ETFs here, you can check out the State Street website. So, you just go up to SPY or type in the symbol of the ETF and then SSGA for State Street Global Advisors. But if you look at like the spider here, you can get your performance, you can get your holdings, you get all this stuff that you really probably don't even really need to know about, but it's all right there. But I like looking at the holdings, and here's our sectors here, and certain sectors are in the driver's seat at different times. Sometimes it's tech. Most of the time, it's probably tech because it's the biggest sector. But sometimes it's some of these other sectors that are really kind of in the driver's seat here. Let's look at communication services. We haven't looked at that in a while. XLC. Yeah, so this isn't really coming back much at all, and this is below resistance as well. See, I would look at this right here, this former bottom right there. Now, I'm not saying it's going to be like major support or major resistance, but it's enough to put a little bit of a top on the market. We look at our small cap stocks; they're really kind of breaking down. Now, where are we this morning? So wow, look at that. So now that can't be right. Down 3.8% in the pre-market.
That's huge.
Do you have a system you can check the quote on?
Yeah. Hold on. What is it? IWM?
Yeah.
Yeah. No, I've got 185.12.
No, IWM or N. Sorry, IWN.
Oh, IWN. Okay, I'm sorry.
Wait. Okay, so this is the Russell 2000 value.
I've got 142.20.
Yeah. This has to be a bad quote.
But it's only up 0.7, 7 cents in the pre-market.
All right, so IWM. All right, and this is the regular Russell. This is the Russell 2000. But anyway, these things have kind of been in a free fall. So this is kind of more weakness. Let's look at our interest rates. All right, so interest rates continue to move higher. And this is going to be an important psychological thing here, this 430 level. Remember, what we're looking at here is the inverse of the bond chart, right? So if I invert this and we look at the bond, you can see we're testing this support. So if this, we talk about sometimes there are certain things driving the market. This is probably more important to watch than any stock right now, because if this support breaks and we remember, this is the bond. If this support breaks, when we break support, sometimes we get these big moves because support is basically just a large group of investors who are looking to pay at or around the same price. And like we talked about before, sometimes when you get to support, you get these bounces because you get these anxious buyers cutting ahead of each other. But when we break support, sometimes we make a pretty rapid move lower, a rapid and meaningful move lower, because support is a bunch of investors who want to buy. And when you take buyers out of the market, when the sellers start coming in, it's like, oh, they can't find anyone who wants to buy. So they're forced to offer their shares out at a discount. It's like, all right. I mean, I don't know what the price of the bond is, but just like say it's, I don't know, just say hypothetically it's 90. Well, someone might come in and they'd be like, oh, I got bonds for sale at 90. And the buyers might be like, all right, well, we'll buy, but we're not going to pay more than 88. And if there's no other buyers around and the seller really wants to sell, well, they're forced to hit the reduced price. So these things don't trade in a vacuum. But anyway, if we get this support break here in the bond, that's going to cause interest rates to rapidly rise. I mean, you could see this getting to 4.5 pretty easily, and then that's going to freak out the market, and that would be bad for stocks. So this is a really important thing to watch here: is that these bonds are at this kind of critical critical level. And let's see. And look at that. If we go all the way back here, right? So right up here. Um, wait a second here. I just want to see the last time we were at this level. All right, so look at that. So here we go, right back here. And we can see the same thing that we see in the stocks, right? What was support becomes resistance. Remember, this is the inverse. We're looking at the yield. So this is the inverse of the price. So support converted into resistance. But anyway, this is June of 08, and this is now. So we're as high as we've been in 25 years. So, I mean, that's kind of a big deal. So that's something we got to keep an eye on. All right, let's go see what's going on over in the oil market here. Oops, 1 second. Got in the wrong symbol. CL1. Crude oil futures. Yeah, oil's kind of. It looked like it was going to reverse, but it's kind of holding in there. But again, we can see here we got our important price levels. So I'm going to bump this resistance up to about 483.50. That's what I'm going to be watching there. Yeah, so not unusual to have a little bit of profit taking when we get to a former resistance level. And this is our sellers who are starting to get anxious and they start undercutting each other because they don't want to miss out. When you get to resistance, a lot of times you tend to get these sell-offs. Like look back here when this level was resistance around 81. We get there and we sell off. We get there and we sell off. This is why, as traders, we want to know when things are at important price levels, because when something gets to an important price level, it tends to move one way or the other. Sometimes it's a reversal, sometimes it's a breakout, but they usually do not hang out there for too long. I mean, look at this down here. So we get down to here, and we were there for 3 days. We were there for 1 day, 2 days, 2 days, and 2 days. Now, if we go up to the resistance, we were there for 2 days and then 2 days. So think about it like the important price level is like you get to a fork in the road. It's generally going to go one way or the other. It's not usually going to kind of just hang out there. Oh, look at this. So we talked about this. Natural gas got back down to the bottom of its recent range. This is what we call the old classic bull trap or false breakout, where it looks like we're going to break out, but there's no follow through. This is just like kind of traders taking it up here. And then we get this nasty reversal. And then false breakouts tend to, in and of themselves, be good contrarian signals. So, all right. So that's that. Let's go see what's going on in the news here. Well, Lacey's a bunch of idiots who ever work for. Well, yeah, I could see that. One of my pinnacle memories, or one of the things that kind of changed the way I look at life, was when I was in college and I was a security guard watching the Teamsters. We're watching them unload these trucks of clothes, right? And they're supposed to take you're not allowed to touch anything. They have to touch it. So this guy is taking these white down jackets off of the truck, and he's supposed to bring them over and put them on a table. And then someone from the company I work with can take them off the table and hang them on the rack and then roll it out onto the floor because it was a store. And the guy's got like 5 or 6 of these white down jackets, and he's walking from the truck over to the table, and there's like 5 more feet to go, and it's like, woo, coffee break time, and he just put them right on the ground, man. Just right in the dirt there.
So so does the store owner eat that jacket?
Well, yeah, I mean, it's hard to sell a jacket that's got stains on it,
Oh boy.
But it's
Yeah, I'd
just
have a hard time dealing with the Teamsters.
yeah, but it's just like I don't know. Listen, man, I'm not stupid. I know that at one point there needed to be Teamsters, unions, but I think that a lot of them are just they went to the well too many times, and that's why. Like my brother's a cop, and they don't have pension plans anymore. They have 401k plans, and I think it's like, I think people just kind of become too entitled. Like I got a good friend who worked for the Long Island Railroad, and I think he retired when he wasn't even 60. Maybe it was like 57 or 58, and he gets a full salary. He gets paid just as much today as when he was working full time 5 or 6 years ago. So
Sam, that's crazy.
So that's unsustainable. I mean, eventually the Long Island Railroad is going to go out of business or at least go bankrupt. And then people like my friend there are not going to be getting their pension, which they think is guaranteed till the day they die. When they first came up with all this stuff, people would die around 50 or 60. Now people live into their 90s.
Well, I watched some of the police officers that I know and not just police officers, but just people that work in government, use their drop system. And they go do the drop and they take a bunch of their retirement money out and then they go back to work on a retirement draw plus a full salary for 5 years that's throwing money back into their draw because they didn't have enough officers. So they were able to go ahead and say, well, I'm going to go ahead and retire in 5 years and I want to go in the drop program. And then they're able to keep paying in and getting paid. It was a crazy little setup, and it still goes on.
Yeah, dude. Certainly,
it's unsustainable. And
exactly.
you're right. It's entitlement, and whether it's somebody that's entitled, like that boy says in that song, Richmond from Richmond, somebody that's spending all their money on welfare that buys donuts, or it's somebody that does it the way that we just discussed. It's all the same kind of entitlement, and we've become a society of, lack of a better word, just a bunch of bitches that think we deserve everything, and it's wrong. You have to work for everything in life. It's just that simple, and it gives you some sort of builds up some character.
Well, I don't know, man. I think now it's like John Kennedy said: "Ask not what you can do for your country; ask what your country can do for you." And now it's like, oh, your country owes you.
Yeah.
So there's a big difference there. But I mean, now it's like, all right, well, hey, man, you go to school, you get a degree in transgender studies, and then you can't find a job, and it's like, oh, well, you guys got to bail me out.
Or medieval weaponry. That's my
favorite. Pay off my student loans. He's like, you owe me. It's like, I don't know, whatever, man. That's ridiculous. All right, let's see what else going on here in the news. Meta. Let's see what Facebook's price to sales ratio is. Actually, I'm going to go here and I'm going to go look to price to sales under statistics. Price to sales. And we're going to go look at Facebook. Yeah, look at that. So, all right. So Facebook's price to sales ratio is 6. And NVIDIA's is 40. What did we say it was 42?
Yeah, 40. 40.
So this is kind of like off the charts here. I mean, even compared to other AI companies. So, this thing may keep going higher, but I would be willing to bet that in 6 months from now, the price is lower. That's just a real. I mean, this is like bubble territory. So listen, what was this? All right, so this is the end of the bear market, the bull market. This is the very end of 2021, and the price to sales ratio there was 35. So even then, it was lower than now, but that's still very high. But then look what happened to the stock price when it got up to there. It went from 340 down to 112 in a matter of months. So I guess the point is that NVIDIA, by this metric, is very overvalued. But these things that are overvalued, they can go on for a while. I mean, it's not like you don't just touch it. Just be careful if you're in it. Just have the mindset that this thing could reverse really quick. So, if you're in it, have an exit strategy. Don't kind of like just forget about it, because you could get up and go out and get lunch and come back and the stock could be 20 points lower.
Yeah.
All right, so actually, look at this. This is right what they're talking about on the front page here. And then there's from the technical point of view, the supply and demand point of view. If all these people are going into NVIDIA, well, eventually they're going to run out of their funds, and everyone who wants to invest in NVIDIA is going to. And when the market runs out of buyers, the only place it can go is lower. So that's probably what's going to happen sooner or later. Federal officials in Jackson Hole, Wyoming. Please. Talk about incompetent, man. All right, so let's take a look at what we got here. NVIDIA now holds the distinction of having the highest price to sales ratio in the S&P 500. Wow. The title 99 companies have had since 1960s. That's pretty amazing. So it's the highest. So look at the price performance. A year later, minus 38% for a company that has a price earnings or price to sales ratio above that. So a lot of what goes on in the market is it's like this reversion to the mean. Things go to an extreme one way, and then they go to the extreme the other way, and they kind of just go back and forth. And maybe eventually they find equilibrium, but at that point they stop moving.
Right.
Tesla top tickers. Yeah. All right. Well, and let's see what this is here. This looks kind of interesting. Mutual fund and hedge fund equity exposure. So hedge fund equity exposure peaked right here. So this is the very end of the bull market. And this just goes to show you, just because someone's at a hedge fund, it doesn't necessarily mean they know what they're doing, because this share shows that they were most heavily weighted right at the very top. But this is, I guess this is kind of getting back to where it was. Mutual funds are still low. All right. Well, anyway, we got that. We got the interest rates are moving higher. So that's the important thing to watch, I guess, now is these interest rates. But if like what I talked about, if bonds break that support and interest rates spike, that's going to be really bearish for the market. And I mean, you look at these leading companies here are clearly in bubble territory. So my guess is that the market's going to go lower. Maybe not today, and we are going into the end of summer here, so things are going to be pretty small, or I should say slower, typically slower than usual. AOC, I used to I never liked AOC, but I respected her. But then I learned she drives a $70,000 car. It's like, all right, so you're a socialist and you drive a $70,000 car. Something about that just isn't right. And now she sells her stuff too. She's got an online website. So, hey, well, I guess she's just a young limousine liberal.
Could you slide back up to the photo, please? I believe she's waiting on her hand to be kissed by this gentleman instead of a handshake. That's exactly what she's doing.
She is just dumb. Remember when they all pretended that they were handcuffed?
Yeah, I mean, that whole thing is a mess. And you know what? You find out that they've got ridiculous student loan debt, and that's why they're pushing it so hard.
Her
and Rashida Tlaib has like $100,000 worth of legal student loan debt. Hers is like 70.
Well, they could just go on a speaking tour and they'll get it paid off.
I don't know how.
But I know people that live in her district, and they were going to build an Amazon distribution center there, and she fought it. And the only reason why she fought it is because the guy who owns Amazon is a billionaire. And that's it. So they would have had like 10,000 jobs. And it's like, all right, well, we can't have Amazon here because the guy who owns it is really rich.
And the amount of money that's generated by those jobs into the area is she can't even count that high.
Yeah, she's not the brightest bulb in the fixture, as they say.
No, yeah.
All right, well, I got a 8:45 call I got to get to. If anyone has any questions, let me know. So we'll be back here on tomorrow and Wednesday, but then I will be out on Thursday and Friday. And it's going to be a pretty weird week for me, man. Pretty weird.
You're going to be okay. You're going to get through this, no problem. Trust me, it's just another day at the office. Once they're out, then you and Mama get back to some good time.
Yeah, it's been a rough couple of years. Short everything. I don't know about that. But I would put it this way, I would be ready to go short. So let's put it that way. If those interest rates start to move higher, then I would definitely take some kind of position on the short side.
Guys, if you don't mind, like, subscribe, and share this stream, and comment too. That helps us with the YouTube algorithm, and it helps us reach more people. Yeah, tell your friends. Call your neighbors. Yellow Pages still work. They got a book. I'm telling you, I found one the other day. Have a great day, guys.